And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
All right. Good morning, everybody, and welcome to the Market Prep for Monday, March the 20th. My name is John Hoagland. Thanks for trusting me with your time this morning. It's great to be back with everyone, and I want to make sure and thank JD, John Doherty, for doing such a great job for everybody on Friday. It was good to see him on screen again. I was watching from where I was, and always great to see my good friend John Doherty. Well, what do we got? We've got context, we've got risk management, and we've got patience. And those are going to be very important for us for the next, well, pretty much every day, but particularly for the next week, I'm thinking. There's no major releases today, but we know we've got the FOMC meeting on Wednesday, which is going to be hotly watched. We have existing home sales on Tuesday. That's 9 a.m. Central. We've got the petroleum status report at 9:30 on Wednesday, with the FOMC meeting release at 1 p.m. Central. 1:30 p.m. Central is the Fed Chair Conference. So a lot of folks are going to be positioning and hedging, waiting for that information. We're going to talk a little bit more about that here shortly. Thursday, as usual, we have jobless claims. We also have new home sales and the natural gas numbers. And Friday, durable goods orders. We do have talking Feds beginning to speak again on Friday. I see James Bullard is scheduled to speak. And then we've got the PMI composite also on Friday. So there is a lot going on in the world. Of course, we know that the banking system is under some stress right now. We've got U.S. stock indices actually set to open higher this morning as central banks try to calm markets. They've done what they call a swap line. Now, I'm not a banker, but apparently that qualifies me to be the CEO of one. The swap line allows depositors in other countries to withdraw their money in dollars. It's kind of surprising that the dollar isn't a little bit higher, but again, I'm not a banker. So a lot of these uncertainties surrounding the global banking system are resounding. We've got gold testing above 2,000 or at 2,000 as crude prices drop on global banking worries, as things kind of get a little bit crazy. And we've got investors pondering the FOMC meeting on Wednesday. Will there be a pause in rate hikes? Will there not be? Nobody knows for sure. And again, as I'm not a banker, I can't tell either. So I'm going to try and really stay patient and focused on what the market is telling me. Market-generated information, I think, is going to be really critical for everybody to find any opportunities for profit. Try and stay calm. It's going to get crazy sometimes. I think we're going to have a relatively range-bound but volatile market between now and Wednesday's FOMC meeting. Of course, anything can happen. We say that here on the market forecast, the market prep all the time, ACH, anything can happen. So we've got Lacey off in the back here. She's doing a little bit of whining. I've got her kind of penned up because we've got some things going on here at the house this week. So there may be some changes or cancellations in some of the events that we've got going on this week. Should be a short-term problem, and we're hoping to have things ironed out here by the end of the week. But again, we've got a few things going on here. So we've got the VIX up 3.5% this morning, up at 26.44. We've got the dollar index slightly lower at 103.40. And we've got the yield on the 10-year pretty much flat here at 3.43. Not a lot of folks just waiting for those FOMC numbers and all of that to come out. But as usual, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You get notification when we do go live. You just relax, Lacey. I know you're in the kitchen, but that's where the food is. So you're okay. You're okay, Lacey. Okay. She's a little upset this morning, but that's all right. Good to see you, Shaw. First in the room, winning the prize. Dan Trader, good morning. Rooster, Alejandro, Jason, Timothy, Charles, Bill, John. Good morning, John. A couple of Johns there. It's good to see you. Maybe a couple of names I haven't seen here before. Great to have you here with us. Good morning, Vince. Travis, good morning. Will. Shy T. Zach, good morning. Haggle Matters. Sarah Hall, prayers and love to you. Anissa, Mark, Fred Decker, it's good to be back. Thank you. Rusty Golfer, Kevin Laffey, good morning. Will R, Urban Cowboy, Naztic, Andy Bleed, good to see you. Shaw is the one who was first in the room here winning the prize. Is that smoking jacket for rallies or dumps? It's actually a sweater. I'm been very into the cardigans lately. Marcelo, well, I'm not a banker, so that qualifies me to be a CEO. Yeah, it was kind of crazy, right? Travis is saying he agrees. Lots of range-bound volatility before the rate decision. They play into range on Wednesday. Lacey must be short today. Well, I don't know. We'll find out. She's seeking some market-generated information right now. Good morning, J-Man and Ryan. This is the link for group coaching today. Planning on having group coaching, and then after that, make Hogue money. And pretty sure that's the schedule for today, and I'm going to try real hard not to cancel anything, but if I have to, we will do our best to let everybody know via social media. Here is the link for Make Hogue Money. That's at 2 o'clock this afternoon. We've got the group coaching session at 12:30. Those are all central, of course. Good morning, Taurus Trader. Haven't seen you in a while. It's good to see you. Yeah, that SVB CEO sat on the board of the San Francisco Fed. Unbelievable, right? Good morning, Zerain. It's good to see you. All right, so we're going to take a look at these charts here. We've got equities ending rollover on Friday. We still have about 450,000 yet to expire and settle in cash today in the S&Ps. We got crude moving to the May contract. We've got natural gas still in the April contract. But the good thing is we're just about through with all of these rollovers. We're still looking for gold to roll from April to June, right past that May contract. Not ready for that to happen here just yet. We've still got plenty more volume in the April contract in gold than in the June contract. So we'll be watching. We'll let you know. All right. So let's see what we've got going on here. I'm going to move into the charts relatively quickly here and see what we have going on. So in the S&Ps, much different market than the NASDAQ for sure. We see that we've got kind of well, we've got this head and shoulders, but it doesn't necessarily seem to be playing out the way a head and shoulders normally would be. We're somewhat range bound here. Somewhat range bound. The roll is ending. We added 35,000 in open interest on Friday. On a down day, we've got some naysayers, some short sellers that came into the market here on Friday, but still difficult to read due to rollover. Lacey, please, Lacey, it's okay. You're okay, Lacey. Just chill. Okay. So what I see here is balance. I mean, last week's high and low really kind of range bound. We're right in the middle of that, and we're in the middle of weekly kickoff levels here as well, with weekly kickoff high at 40.34 and weekly kickoff low at 38.88. 38.88. I've got them pretty tight here because I think that there's going to be, with the advent of no rollover and all this new information coming into the marketplace, I think there's going to be some pretty solid new longer time frame participation, but maybe not till after Wednesday. It's okay, Lacey. It's okay. It's okay, Lacey. It's okay. You're fine. Just relax. Just relax. Okay. Even Lacey's very upset about all this that's going on. So, what's the next shoe? Well, probably the next shoe that's going to fall will be the FOMC meeting. That's the only thing that I can pick out that I actually know is going to happen. There is going to be an FOMC meeting, and there's going to be an announcement as well as a chair press conference. So, focusing on that, if I'm a big trader, what am I worried? What am I doing? I'm hedging myself. I'm liquidating or hedging. If I'm a major player, what am I doing? I'm hedging. I am not a major player, but if I were, that's probably pretty much what I would be focusing on prior to Wednesday's Fed meeting, right? So, take a look at the 30-minute chart. We're going to be focusing on market-generated information. What is the market telling us? Well, looking at this 30-minute chart, where are we? Okay, here's weekly kickoff low. Here's last week's low. Here's last week's high. We're in the middle of all that. We're even in the middle of the range from Friday. We don't really have much as far as overnight inventory is concerned. We're bordering opening in value. We're certainly probably going to open in range. Be patient. Be patient. No gap, no nothing. Be patient. In value, indecision. Indecision is what we're seeing here. So take advantage of that. When there's indecision, traders are going to get too long or they're going to get too short in certain areas. Be cognizant of where those areas might be. Here's the profile from Friday. B-shaped long liquidation. But normal variation, probably an extreme normal variation, day to the downside, very low excess low. We rejected a potential, which it wasn't a true late spike on Thursday, but we rejected higher pricing back into range, back into almost, you could say, a repair situation. Well, our overnight low and our overnight high are interesting because they're closer to the extremes of the areas of balance, of the area of balance that we're looking at. So I'm going to try and stay patient, wait for the market to open up because, again, we're in range. We're largely in value. There's going to be opportunities coming down the pipe. Maybe not so much first thing in the session here. So just be patient. Take a look at crude oil now. Crude oil just opening up. We've got not only a structural or technical breakout, we've got possible fundamentals in this market as well. It's a technical break as well as fundamental activity driving prices. We've got rollover tapering, although rollover didn't keep us very range bound, did it? So we're looking at the December 2021 swing low at 62.40 as our weekly kickoff low. There's another swing low, not too far down below that, but we've come a long way in a short period of time. We lost open interest overall. Actually, we gained open interest overall on the way down. We lost 24,000 in the April contract. So the April still losing open interest to May, but overall we added 6,600. So that, if I had to say, was healthy to the downside, right? Well, only time is going to tell. Take a look at the 30-minute chart. Range. Lots of kind of weak structure above, but until we take out these highs here and close this gap, it's likely going to just kind of remain range bound or push to the downside towards our weekly kickoff low. So where are we? We're at settlement. We have any overnight inventory? No, not really. Here's where we started. Here's where we are. Settlement, in range, in value, patience. These markets are looking for new information. These markets are looking for new information, and they're going to get it. Just a matter of when. Maybe Wednesday. Take a look at the TPO chart. Here's including the overnight. Friday, normal variation. IB high is the high of the session. Normal variation, just range bound, overnight, extending lower, but we're back in range and in value from the range from yesterday. Yesterday meaning Friday. I wasn't watching on Friday, but I'm watching today. That's for sure. So here we are in range, in value, in the overnight range, of course, but our range from Friday, patience. Patience. Especially when things start moving fast. When things start moving fast, I have to remind myself to slow down because it's the calmer mind that's going to make the right decision. Calm, cool. Be ready for when the market comes for you. Don't come for the market. All right, here's the NASDAQ now. Look at this NASDAQ, so much stronger. We actually have broken out of the range bound. We're looking at a short time frame upside move that is basically presenting us with potentially a bull flag. We lost 12,000 in open interest on Friday, a little bit different than the S&Ps again, which added 35,000. Maybe a little long liquidation was in order for us on Friday. So we've got our weekly kickoff high to 12,794, weekly kickoff low 12,140, and we've got a much rosier picture looking at this chart than we do in the S&Ps, but of course NASDAQ doesn't have any banks in it. So upside structure intact. How's it doing? Maybe not so good. We lost open interest here on Friday, but we've got lower low, lower high, lower volume. Volume was okay on Friday. We'll see what the volume looks like today. But this may be smaller range, opposite the bigger move, could end up being a bull flag. We got to see if we can get a couple of points of contact on some sort of trend line on the top here. I'm not ready to set that trend line yet here. We'll have to see how this day plays out. But again, overnight inventory, no. Are we out of range in value? No, we're right in value. Very little change in the perception of value. We're inside Friday. We're inside Thursdays, Friday. We're inside Fridays, Monday. This market is looking for new information. That's what it is doing. Here's let's take a look at this one. Here's the profile from Friday. Long liquidation, B-shaped, losing open interest. That's all in order. Normal variation, day extreme. That's all in order. So it makes sense that we're still kind of pulling off a little bit here in the overnight session. Let's see what happens in the regular trading hours session. Overnight low, overnight high. Much more interesting levels than where we are right now for opportunities, if you ask me. Gold. Well, it is in rollover, but it's not acting like it. Look at Friday. What a big move to the upside on Friday. And supported by an increase in open interest by about 19,000 contracts. So the upside move is presenting as relatively healthy as far as open interest is concerned. A little bit of waffling as far as volume is concerned, but if we still see open interest coming in on up days, there's still money out there willing to buy it. Where are we? Well, we're just under 2,000. Psychological, big fat round number that's the weekly kickoff high today. The upside auction, again, presenting is relatively happy. Here's the 30-minute chart. All right. So, well, look, I mean, we're going to be opening with a gap. We've got, higher lows, higher highs. We've taken a look above weekly kickoff high, and we've still opened with a gap. We haven't been able to close the gap. Everything here is still saying I'm looking for opportunities to buy weakness. And we'll have to see what plays out here. One thing that we do want to point out here is the fact that we had a late spike on Friday.
Hey, get in there. How does she get out?
She busted out the bottom. I'm gonna have to get some duct tape. I'll do that as soon as I'm done here.
Okay.
Yeah, don't worry about it. Don't.
Stay down here.
Yeah. Dog got out, so everybody's freaking here. So, anyways, late spike. Opened above a late spike. Acceptance of higher price. Healthy auction. Luke, I see you're talking about, so option volume also has open interest, but does future open interest interact the same as option open interest? Yes, it does. Open interest is the total number of open contracts. So on this push to the upside on Friday, we added a whole bunch of new open interest to this market. Buyers. Money was still coming in on the long side. Now, there's different ways to use option open interest in futures, but we don't have time to discuss that here right now. All right, so late spike. What is a late spike? It's the market moving to a new level at the end of a trading day, not allowing time to show acceptance. Right? So we are opening above a late spike. We're leaving the late spike. The gap remains. So far, the nuances are saying we're going to look for another test of 2000, which is weekly kickoff high, and we may seek acceptance above that. If we can't, then we may come back and just kind of range for the day here. Here's the euro. And here's the weekly kickoff levels have not changed. Last week we went high to low. Lacey, come here, girl. Unbelievable. So we went high to low on our way back to retest the highs, but the weekly kickoff levels haven't changed in 2 or 3 weeks. Why? Well, because we've got range bound activity. I mean, we've been holding here for the last 3 weeks. Take a look at the 30-minute chart here. All right. So value moving higher off that low. Points of control still remaining unchecked in regular trading. That's a little bit of kind of sloppy upside structure. We get a chance to see price up here near weekly kickoff high, last week's high. This looks like an interesting area for me. This looks like a spot where I might be able to catch some fish. Okay. All right. Let's take a look at the TPO chart. This dog is eating my house right now. Okay, there she is. All right, so here is another late spike. We had a double distribution day to the upside. The late spike to the upside, there it is. The base of the late spike in the euro, 107.365, 107.365. That's the base of the late spike. Well, we don't have to worry about that right now. We've opened flat out above it. flat out above it. So we're going to be seeking acceptance. That's what the market is basically telling us. We're going to be seeking acceptance above this level. This place is an absolute madhouse this morning. I apologize for all the noise. We're going to have to see what we can do about this. Here's the 10-year. The yields continue to try and push higher, but that's off for now, right? So we've got price moving higher while yields have been moving lower.
What's that?
Okay, so rate rises remain in question. Weekly kickoff high is in play in the overnight and may be today. Last week's high, of course. Lacey, come here. Lacey, come here.
Morning. How
Hey,
are you?
okay, how are you?
Good.
Lacey, come here. Lacey, I'll be with you in just a minute. Lacey. Okay. Yeah, Luke, she's eating everything right now. So, so here's the 30-minute, and I apologize for all this noise. I didn't know it was going to be like this here this morning, but apparently it is. Overnight inventory, no. Back in range, back in value. These markets, if you were listening to them, especially the ones that are opening above late spikes, they're telling us they're accepting higher pricing. The ones that are telling us that they're opening in range and in value, very little change in the perception of value. And we know that a lot of traders are going to be seeking opportunities to limit risk for the next 3 days. Here's the TPO chart for the 10-year. No highs or lows, extremes. There's low excess, high and low. We have a high. We have excess lows and highs on Thursday, which kind of puts us in the range that we're currently in. I'm looking kind of down here and up here for the extremes and opening in range and in value. Again, reminds me to stay patient. Take a look at the natural gas here, and then I'll go deal with my crazy house. Still range bound, still the same weekly kickoff high and low. We have last week's high and low closing in on price here, kind of working our way away from this sticky little area here. We added 2,800 in open interest to the downside. Here it was on Friday. Last week's low supportive. We did open, looks like, with an attempt to open outside of value, but driving right back into value with no overnight inventory. Says, let's be patient again. Here is the TPO chart. Normal variation with a late spike to the downside. What did we have last week? At some point here, we had another late spike somewhere, but this late spike is being rejected by price. Price is rejecting lower pricing because it's opened above the base of the late spike. The base of the late spike I'm going to look at is approximately 234. We've opened above it. We're in range. We're in value. We could range. We could push higher. And then if we re-accept down below that late spike low, then we know what's going to happen there. All right. So, okay, I have got to go take care of a little business here in the house. And we get the crazy dog running around. I don't want her eating staples and paint, so we're going to get her back corralled up, and I will try and keep her happy today. And hopefully we'll have some happy traders today. Again, planning on doing the coaching, planning on doing Make Hogue Money. If something changes, I will try and let you know via social media. And again, my apologies. It's getting a few things done around the house here this week, and it's going to be a little bit crazy. We're going to try and work my way through, but if not, we may have JD come in and take care of a couple of these things, and I will be here for everything that I can be. So Again, my apologies, and let's just get out there and have a good trading day. Let's take a deep breath. Be humble, creative, grateful, and and creative in your trading today. Get out there and profit. Looking forward to seeing you for group coaching if I can make it happen. Have a great trading day. Otherwise, looking forward to talking to you again soon. Blessings to you all.